Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. This is our internationally oriented webinar addressed to traders all over the world. We will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. My name is Alex Raftopoulos and I'm very happy to be moderating this webinar for you. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. Statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk claim on our website. Here you can see the schedule for the week. Today it's Dirk's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Please feel free to have a look around our website and explore our international activities, and do not hesitate to contact us should you have any questions. Well, enough of me for the moment. Now it's Dirk's turn. Good morning, Dirk. How are you doing, and what's your outlook of the markets?
Maybe did you hear me already, or?
Now we are hearing you.
Okay. Once again, good morning, guys. Of course, good morning, Alex. And yeah, let's check out the markets. Let's browse through the markets. What is going to happen? What could be happening this Friday, the first trading day of February? So as you already see when you look at your calendar. So the month of January was quite prosperous for guys being investing in, for example, the US markets, like the Dow Jones, NASDAQ 100, or especially for the SP 500. Possibly you have read all these kind of headlines that the SP 500 made the best January gain since 1987. So let's see where that leads us to. And that's the point where we might start with the first market here, just from screening that one, from analyzing that one. That's the SP 500. So let's say that's the broadest index, the most important index of the US. And as you already know, that the earnings season is still running, of course, but it's getting let's say to the more important end. The next 1.5 weeks, especially a couple of those companies reporting next week will be on top of that. Possibly, yes, beating estimates. Nevertheless, if you look at the daily chart and if you look at quite an interesting constellations, you will see that there is possibly a trend line to this. I would just use this pink trend line and just drawing that, a couple of them, just to make sure if there are some interesting levels or next levels to come. And on top of that, drawing the Fibonacci retracements as well. If you look at the last high, the record high, and going down to this dip here, oops, that is not the correct one. That's the one. You will see that we are, if you're zooming in, that we are currently testing or bouncing around this 61.8 level here. Why is that not working right now? Let's see if we can just move that on the 61.8, just because possibly not working because I opened a short trade around there. So that's a 61.8 level trade, let's say it that way, possibly bouncing back to the downside, not only targeting in direction of 50, or possibly targeting sub this trend line in direction to 38.2 level here. Why that? Just because of a technical side? No, just because of a couple of other issues as well. If you look at the current status of the US-China trade dispute or conflict, let's say it that way, possibly there is some, let's say, powder for the bears in the next weeks or the next days and weeks to come. If it's not possible to get a solution for that kind of a trade deal. On top of that, a little bit of that powder from the Federal Reserve, which we got from Wednesday on top of that, might be already done, because the market is still a little bit afraid what is going to happen in the next weeks and months to come regarding the policy of the Fed. It looks like the Fed has no more possibilities to possibly stay that way until the rest of the year. And on the first hand, that might be very perfect for stocks, for the stock market, but on the longer time frame, it might be question yourself what is going on with the market. Is it still stable? Is that a signal of stability, or is it just frightening? From the technicals, of course, you can insert pivot points as well here. You will find them via your navigator, and if you click on Admiral Pivots here, just insert them here as well. In addition to the current Fibonacci's, right? So if you look at this resistance 1 level here at 2738, that is quite close to that stop loss level I just chose to this morning. And if you look at a couple of those possible targets to the downside from the just from the pivot points side, you will find support 1, support 2, support 3 in direction to that 50 retracement here, right? So that's possibly in addition to that Fibonacci retracements analysis. And if you sometimes compare, or let's say work in addition with pivots and Fibonacci's, you will find some possibly cluster zones which give you a little bit more confidence if they work out in that direction you already expected. Let's skip that SP500 and just go back to a couple of trades we did last week at Friday. Not cheerleading, not saying, oh, whoa, whoa, we are very perfect, we did all this stuff right. No, it's just checking out where is the current status. So last week we spoke about a Euro Swiss franc long. That one worked well. On top of that, if you read, you follow me on guidance, for example, I just told the most of the guys just to exit the positions and just to feel free. Of course, if you like that, to move stop losses to the entry levels or move stop losses a little bit more to the upside, if it works well for that one, or just to exit half of the position and let the other half of the position run into direction to the upside as well. So there are a couple of those possibilities. And we had just spoke about that Euro Swiss franc entry at the 112.80s, 112.60s in direction to 112.90s, and that one already rocked up in direction 114.20s level, as you see that on the chart right here. We spoke about an Aussie US dollar trade, so the Aussie trade long was quite well as well. And we spoke about a couple of other trade issues like gold and bond futures. That is the next one on top, getting very interesting here. Looking at the weekly, we are already scratched that last high. Let's go to the monthly, back to the monthly. You see that black line from the last high here, going into more details here, into that last high of 165.54. That one got scratched here as well, and possibly leading because we are on the weekly, we are on the overbought territory here already. So it might be interesting to start a couple of short trades in direction around this 165.60s, going in direction back to 61.8 level of 164. So that might be an interesting level. Last week we spoke about US dollar Canadian, so the loonie. We told about a new short opportunity. We spoke about that new short opportunity, and if you check out the last levels from last week, for example, webinar via YouTube, you might find those entry zones as well, and the issues we spoke about and the directions where that trade might head to. So that one is taken out already as well. At the level of this 61.8 level here, around that 131.50s. If you don't believe that this is really working, just check out the FX Dirk on Twitter. So you will find that kind of trade scenario there in my feed. And as I took that out, I took the half of that one out, and later on took the rest of it out at 130, 150s. So this is all presented at the FX Dirk tweet scenarios you will find on my Twitter website. Checking out a couple of other issues here. Where is the Euro-US dollar? This is an interesting situation. I just unpack that little bit of more fundamentals for you. Besides the technicals, we will start with some technical issues here as well. We will just draw the last from the last low to this upside level here, and you will find a couple of next resistances and of course next supports from the Fibonacci retracements. We will do the same the other side from the other side as well, going from the last high to this last low here. Of course, changing the color, not to confuse you guys, because of a couple of Fibonacci retracements in wrong colors. So very important not to be confused with a couple of levels there. And just to check out where possible clusters are. And you see black and red lines together in direction of the 38.2, in direction of the 23.6 in combination with the 61.8 level here to the downside. And of course, some projections giving you a hint where this market could be running up to, so just from the projection side of the Fibonacci retracements here. Just will mark them for you that you will see some kind of levels. And on top of that, of course, I'm widening that one, doing the same like we did with the navigator. Where's the navigator here? And adding that pivots as well, just to see if there are some clusters here on top of that. Looking at the resistance 1 level here in direction 114.95, which is quite close to that 115 handle, and looking in direction to that resistance 2, 115.44, and resistance 3, 115.74. Needless to say that there are some sentiment datas and option datas as well, so it might be interesting to see that there are some so-called option expiries for today, and they will be expiring at the New York time, and you will find some nice let's say handles around that 115 level as well. So that gives you a little bit more confidence, not only from the chart technical aspects. On top of that, you will find some sentiment or options data, and on top of that, you might be running into your fundamental analysis as well, and we'll be checking what is going on with the US dollar in the next days and weeks, and furthermore to come. You might find all the stuff free at the website of the CME Group, which is one of the biggest exchanges in the US. And if you check out target rate probabilities until the end of the year 2019 regarding US dollar, it's very interesting that you see that the Federal Reserve did not even change some words in their statement. They even, all these kind of target rate probabilities show you that the current rate status at 2.25 to 2.50, which is the current target rate, is not really moving the next month until the end of the year. So if you check that out, all these kind of datas, 20th of March, 1st of May, 19th of June, 31 of July, 18th of September, 30th of October, 11th of December, and even 29th of January 2020. These are all the Fed decision dates. You will find 1 year in advance, you will find a probability of 70.6% still that there is a target rate at the current status. So no move expected, and which is kind of frightening maybe, and is maybe speaking for Euro bulls, is the fact that the Fed might be even reducing, might be even taking out 25 basis points in the next year. So that is the big question mark still. Right now, this is the issue right now. Of course, it can move. Of course, it can flow. And the information which is said today is sometimes wiped away in a couple of hours. And we never know what happens at 14:30 today when NFP data is coming out, is going to be published. All right. So what is bearish for the euro this morning? On top of that, with fundamentals, if you check that out, you will find free information about PMIs this morning. You will find all these kind of PMIs for Germany, Eurozone, Spain, Italy, and a couple of others, and of course not to forget France, and especially for Germany and the Eurozone, and especially for Germany first, you will see that the so-called PMI, the PMIs are reducing and going down in direction sub 50 levels. That means that kind of a prosperous era might be over for the next weeks and months to come. So that means contracting and not expanding economy. So what does it mean? Furthermore, it could be, yeah, let's say that way, giving some pressure on the market besides the euro, of course, on top of that for the German DAX. So that kind of a target here, I opened this trade this morning at 114.60s, and taking into account all this stuff I already talked about now and told you guys, it might be a nice target in direction of 114.98 to just say grab that 115 handle. If you like to do that with a technique, opening, let's say, two positions and closing one at 115 or close to 115, and move the stop loss to the entry zone and let the other half run, you may do so. But don't forget, as I told you, 1430 NFP data might be bumpy. What is going to happen there? 1490, if you look at forecasts, might be something like NFP data gives you a 140K in direction 170K of new employments. But very important to say, you don't know anything right now about the effects of that 35 days shutdown. And from the historic aspects, that shutdown is the longest in US history. And of course, all these people from the government, they are not counted in there in that statistics, in that NFP statistics, but they might be having effects on the economy. So imagine there are a couple of government guys giving out contracts to private workers, and they might suffer, not getting new contracts, not getting new work, and that might be having an effect on that kind of statistics. Let's see what happens like that. If it really comes out very weak, it might be euro bullish, and giving us some more power in direction of 115. Just interpreting it that way. Okay, that was the euro-US dollar rate. I need just to check out if I don't forget anything about that stuff I already spoke about. And one thing as well, buying US stocks, right? Checking back in direction of that SP 500, just in case if you're out and doing not only doing day trading or doing something like position trading or swing trading. Absolutely important to say is sometimes people forget if you are an euro investor, and I'm talking about if you're an euro investor that the euro is your base currency of your account. You start trading into the US markets like the S&P 500, and doing that like a swing trade, swing short or swing short or a swing long. Let's just talk about the swing long, and you might be happy to find a nice dip to ride the next bounce to the upside. But you just simply forget that you are a euro investor and buying yourself into the US dollar. So if the US dollar is weakening the next days and weeks, as long as you are holding your position, you are in that direction. You are an investor not only in the S&P 500, but on top of that, you're an investor in the US dollar as well. So it might, let's say, it might eat a couple of winning trades, a couple of this winning position possibly, just by this example that the US dollar is weakening. So when the greenback is weakening, your position might weaken as well. And if you just sell it later on, you will see that you possibly didn't win that much, like when you do that from the US dollar perspective. Okay. German DAX. Where's the DAX? looking at the current levels, of course, not to forget, prepared that board for you, as you maybe are used to. These 2 days resistances and supports are from the German DAX. So that one is the DAX from 9 o'clock on. And you find a couple of resistances here in direction of 11,306 and 11,439. We are very close, still very close to that pivot point of 11,179 here, and in direction to the supports, as we already tested the level yesterday in direction of that 11,046, which you see at support 1 here. That might be another dip to the downside if you're really looking in direction into testing the 11K marker. Checking out gaps. If you look at gaps, you will see that there is a DAX gap. There's a gap from the 18th, 17th to the 18th, and this gap is closed or would be closed at 10,929.30. Of course, if you look at the future DAX March contract, there is no gap right now. So this gap here is only DAX gap. There is no future DAX March gap. And if you look at the future DAX, oops, wrong side, where is it? If you look at the future DAX March, that you see possible targets to the upside just due to pivot points. For example, you will see 11,293 as a one step to the upside and 11,432 to the upside as well, and to the downside, like this set the pivot point where we are hovering around here, and next supports at markers of 11,028, and sub that next support 2 is in direction even 10,901. All right. So I spoke about the Federal Reserve. I spoke about the non-farm payrolls. I spoke about the shutdown. This is already done. I spoke about all these kind of stuff, okay, just to remind myself that I don't forget anything. And now we are just checking out a couple of those levels, interesting from the Fibonacci perspective as well, and just checking out the level from the downside to the last high here, which is a little bit more relevant. Let's check out if that is the correct high, 11,321.75. And when that one got tested, that level got tested yesterday and got sold to the downside here. Just doing that and zooming in and looking into directions to the downside here as well, where we find projection levels. Don't want to frighten anyone to show projections sub 10K markers, just from the technical aspects, just showing them and just marking them. That they are still there, or they are there, and it's just informational purpose here. And we will wipe them away by zooming in back in and just checking out if there is a current level which is interesting to catch up. The first of all is the regaining zone of that 11,320s. And the next step, as I already told you guys, is around the 11,430s marker, which I spoke about the future DAX pivot point resistance to already. So that would be the DAX markers to the upside current status. Okay, Alex spoke about a couple of markets. One thing, possibly that kind of oil trade this morning. I'm not sure about where Brent and WTI are right now hovering around, or let's say where they are moving in which kind of direction. I started about doing some research about that WTI contract regarding the fact what is going on with Venezuela, but found out to myself, and possibly you guys did the same, that this kind of Venezuela oil stuff is completely irrelevant, because they are still possibly there. It's still possible for them to sell oil. The only thing is they don't get money for it because the US are blocking it. So just from the flow, from the oil flow perspective, let's say it's neutral. Okay, are there some questions?
There's no question you haven't answered already. I would say there is one question about the dollar, Canadian dollar. Do you have any?
Yes.
Yeah. Do you have any outlooks for that one? It's just plain.
Oh, okay. Because I spoke about that trade, and that trade is closed. That scenario is right now closed, and I didn't do a new research stuff for me here. So everything I would say right now with something is talking from the glass ball. So wouldn't be perfect, I guess.
All right. All is clear. All is clear. So everything. There's no other question. No, I can't see another question. No. We're
all
done.
right.
Yeah.
Okay, so you guys, before Alex is taking over, of course, let me just send you some wishes for a perfect weekend. Hopefully you guys are able to relax and have some fun, and maybe you go along some beers or wine at the bar as well. And we will hear us at Friday 11 CT next week if you like that. I already do it the same like Alex. This webinar will be available on YouTube the next hours to come. So if you have any questions or if you like to replay that stuff again, you're very much invited to do so. Thank you very much. Have a great weekend, guys.
Thank you very much for the analysis, Dirk. Yeah, as Dirk already told you, the webinar will be uploaded onto YouTube. You can have a look at it whenever you like. Exactly. I wish you a very good weekend, and yeah, have a couple of wines and beers and whatever you like. Goodbye.